So our second company this afternoon is CommLoan, which is creating a marketplace for commercial real estate loans. And please join me in welcoming to the stage Mitch Ginsburg.
Thank you, everybody. As I guess my name is Mitch Ginsburg. Been in mortgage banking for probably about 30 years or so. I guess I started when I was 4, and that's my story. I'm sticking to it. Ran a residential mortgage bank for 25 years, so really understand lending, and just saw an enormous gap, an enormous need in commercial lending to simplify and create a more streamlined process. How many of you have been involved in a commercial real estate transaction? Okay, quite a few. I would imagine for the majority of you, to say the least, it wasn't a great experience. And the reason for that is that the commercial lending landscape is so fragmented. There are multiple different types of lenders, from your life insurance companies to your CMBS players to your national federally chartered banks, state chartered banks, credit unions, Fannie Mae, Freddie Mac for the multifamily, and the list goes on to private label players, etc. So to further complicate the issue is there's a multitude of property types, and as we call the main 4 food groups, retail, industrial, office, and multifamily. But then you've got hospitality, you've got all the different single-purpose properties. So very, very complex as far as different property types. And then to add to it, you've got this huge group of different loan types, ranging from monthly adjustables all the way through to 30-year fully amortized, and pretty much everything in between. So needless to say, the borrower really isn't well served in this current environment. Very fragmented, very complicated. So the solution is CommLoan. What we've done is we've recognized that there really needs to be a platform to bring all of this together. So CommLoan has created what we call the Cupid Platform, stands for Commercial Underwriting Pricing Index Data, and obviously playing on the whole matchmaker thing, we're the lending matchmaker. And what this is a transformative web-based platform. But recognizing that we're dealing with an extremely complex and a very, very complex product and a very high dollar amount, that very few borrowers at this point in time are ready to go online, do a loan app for a $5 million building, and then wait for the documents to arrive by FedEx, a few weeks later. So we match the borrower right up front with a very seasoned loan originator who will counsel with that borrower to guide the borrower through the process. So that's the concierge service that we provide. So the Cupid platform, the counselor will sit down with the borrower or on the phone and walk them through the process, find out what their needs are, and then we issue a pre-qualification with 6 top lenders to that borrower that best fit their needs. The other side of the platform essentially is a database of lender information, of the lending guidelines. We're beta testing the platform in Arizona and California, and we've got probably about 350 lenders on the platform representing about 25,000 loan products. The rates are kept up to date every day with algorithms where the system just pings the various indices. And the lenders themselves just have to go online. They have a portal where they can update the products. So if they're adding a product or changing their underwriting guidelines, the borrower also works from a portal. So from a borrower experience point of view, when they get their pre-qualification certificate, they get an email with a link. They go online, they open their portal. They can download their pre-qual certificate, sign the document, their broker agreement online, upload all their documents, and then all the communication going forward is via that portal. The beauty of a self-contained platform, that the lender's putting in information, the borrower's putting information, and it's all within the platform, is it's extremely secure. Gets away from the old way of doing it where you're faxing or emailing, and I still can't believe that people are faxing documents, but I believe it still exists. And so everything is uploaded in a very, very secure environment. So what is this market size? It's a $500 billion a year industry. That's the size of commercial real estate lending. The very exciting part for us is the space that we live in, is that in MBA statistics, 2/3 of those loans are originated by third parties, which means the banks are used to getting their loans from somebody else. So this space is dominated by lots and lots, thousands, probably tens of or hundreds of thousands of little mortgage brokers that ultimately send the loans to the respective banks. So to draw an analogy, if you looked at the travel industry prior to the advent of Travelocity and Orbitz and Priceline and all these platforms that we all use, anybody wanted to travel, they would go to the neighborhood travel agent, right? There was a travel agent on every single corner. You would go there, they would book your flight, they would book your hotel. Was that the best for you? Probably not, but that's who they had access to. So fast forward to the present day, you now go online and you've got pretty much unlimited access to the world's travel data as far as airlines and hotels, etc. And really, the travel agent has gone by the wayside with the exception of very specialty trips and stuff that are put together. The mortgage broker today is the travel agent of the commercial lending industry. Very limited access to a limited number of lenders, a very manual, time-consuming process. So these are some of the lenders we have on our platform. We've got all the majors, B of A, Wells, Chase, Citi, all the big national banks. We've got Fannie Mae, Freddie Mac on the multifamily. We've got all the big CMBS players, Goldman Sachs, Cantor Fitzgerald. But the very exciting part is we have all the small community banks in the areas that we go into. So for example, Arizona and California, where we're beta testing, we got all those small niche lenders that are very aggressive on certain loan products within their very limited lending footprint. So truly giving any borrower unlimited access. We also have private label relationships with a whole series of commercial real estate companies where we private label a commercial lending platform for those companies. For example, NAI, Sperry Commercial, SVN, etc. So we give them a commercial lending platform, private labeled, and we provide all the technology and back office support for them. We've also private labeled a lending platform for residential mortgage banks, so they're able to offer commercial loans. Well, who's our competition? Essentially, the competition's the status quo. Any borrower could either go it alone, and they could have access to maybe 3 or 4 banks, very time-consuming, calling, dealing with 4 or 5 loan officers, sending your documentation off. Or alternatively, they can go to a broker, and as we discussed, they maybe got access to 10, 15 different lenders. Once again, very time-consuming, high effort. Or with CommLoan, after a 10-minute conversation with a loan consultant, they got access currently to 25,000 loan programs and will get a result within minutes after that conversation. Really changing the way commercial loans are handled. So how do we make money? We make a fee, a percentage of every loan through our private label relationships with that we've created with the commercial real estate companies or residential mortgage banks, as well as we are taking over some small mortgage brokerages as net branches using our technology. This is our growth. We've closed probably about just over $160 million worth of transactions to date, which represents about 80-something transactions. We've got about $90 million worth of transactions in our pipeline. This is the growth projections over the next 5 years. We should have an ARR, an annual run rate this year of probably just under about $1 million. Next year, probably around $2.5 million based on our projections, and up to probably around $40 million in the year 2023. This is our team. Obviously, I've introduced myself. Piyush Dal is our CTO, very, very capable, great guy. He was the original architect on the platform. Piyush has been with us from day one. He's been in the industry 22 plus years, worked with major companies like Intel. The other key member of our management team is Allan Snyder. Allan was the past CFO of Starwood Hotel Group when they merged with Marriott. He's currently the CFO at PetSmart. He's probably one of our major single private investors as well, and is a great, great, great member of the team. So what are we going to be using the funds for? Essentially to further automate the loan process as we go along, just to increase our automation. accelerate the growth of the loan offer and private label base, and obviously to further drive marketing capabilities. So guys, I guess that's my show. Thank you very much.
Thank you, Mitch. Thanks, Mitch. Pam, you want to start off?
So thank you. There was quite a bit of information in that, so we really appreciate it. Is it fair for me to think about the business as kind of the lending tree for the commercial marketplace? Is that a fair comparable?
I think not really. And why it's not similar to Lending Tree, the way Lending Tree works is you go online, you fill in a very quick application. Then Lending Tree's business model is they sell the leads to banks that are willing to pay for those leads. So if I have a certain geographic area, I want to look at all loans in the Bend, Oregon area, that will be my requirement for Lending Tree. So somebody goes online and they're looking to get a loan from Lending Tree in Bend, Oregon, I would get that lead. I pay a certain dollar amount for that lead. So from a borrower experience point of view, the borrower is going to get contacted by maybe 5, 6 different banks, whoever were willing to pay for the lead. Firstly, are those the best lenders? Probably not. They were the ones that were willing to buy the lead. Plus, the borrower still has to deal with 5 different lenders. The key, and I think this is a great point, and I'm pleased you raised this, with our platform is we focusing on the borrower experience. That's intrinsic in the DNA of CommLoan. We keep going back and saying, how can we improve that experience, that the borrower gets a superior experience to if they were working with their traditional banker or mortgage broker. So in our case, they deal with one person. That's their loan consultant upfront, who's really now giving them access to hundreds and potentially thousands of lenders using technology. So they're communicating with one person throughout the loan process. Initially, the loan consultant, and then secondly, the baton is passed to a credit analyst who gathers up the documentation to put a really quality package together for the lenders. So the huge difference is the borrower experience between us and Lending Tree.
But it's still a two-sided marketplace, right? Because you've got to find people who are going to, want to be able to fund these things, and then people that are going to want to.
Absolutely.
So in that regard, obviously creating a two-sided marketplace typically requires a significant amount of investment. How are you planning on supporting that in terms of your marketing efforts and sales efforts?
Okay, so our sales efforts are really very, very direct. So we're working through private label relationships with various commercial real estate companies where we're setting up a private label platform for them. So it's a very target market. It's very easy to define who our customers are, and it's really through direct sales with account executives calling on them in order to do that, which there's not an enormous cost involved with that. In addition, it's taking over existing mortgage brokers, with once again, it's very easy to define the market, who they are. And once again, it's a direct sale, using account executives, et cetera. So absolutely there is cost involved, and that's why I'm here. But it's really not that significant in relation to the growth potential that we have.
Thanks, Eric.
Yeah, so I want to follow up on kind of where Pam was headed. But congrats on the traction and getting the initial loans. That's always exciting to get that done. And this is an industry that needs some innovation, so that's great. My question, though, is we'll assume that there is no direct competitors, kind of the status quo, and you're building this and you get some success. There are kind of on the residential side, and just in the financial world in general, there's a lot of these matchmaking financial sites. And so can you talk a little bit about defensibility and what would keep some of these more mature, later stage with a lot of money, these financial organizations, of seeing the success that you're having, that, hey, there's a revenue stream there, and then coming in to kind of replicate what you've created?
Yeah, and that's a great question. I think it's inevitable that there's going to be competition, and I think to some extent competition validates the process and validates what we're doing. It's a $500 billion a year market, and we're really looking to disrupt an existing status quo that's extremely ineffective and very inefficient. So I have no doubt, I'm under no illusion, at some point in time we are going to be copied with virtually a very similar model. I think the key is just to be ahead and to be that one step ahead. And I think no matter what it is and how deep the pockets are, absolutely the technology at some point in time to a certain extent can be replicated. which is going to take time because why this has never been done before is the complexity of it. And really the process flow on the search engine and how the data is organized really was a major task to create a very simple input process and a very simple, clean result, output, of the different loan results. So I think irrespective of the amount of money, and certainly, can it be? Yes, but it's going to take them time. It's going to take them time to create the technology and get the process flows right. And more important, it's going to take time to build the lender database. And certainly, we're getting lenders used to doing it our way. And now all of a sudden, the next guys are going to have to come in to convince the lenders to do it a slightly different way. So once again, the first to market and first market adopter, we believe we're certainly going to have an edge. But we can't be complacent. I mean, it's obviously something at some point will be copied, I have no doubt.
Okay, great.
And if you are private labeling this with existing commercial loan brokers and offering it directly, in essence, are you competing with your channel by offering this direct as well as through private label?
So the private label is with for example, a commercial real estate company. They've got a captive client, and they're saying as a value-added service, they can provide the financing. That's not their core business. Their core business is obviously selling the real estate and making the commission on the real estate. So they're selling it as a value-added service. Clearly it is a profit center for them because we do incentivize them to send us loans and they share in the revenue. But their primary goal is to provide a value-added service. And the feedback that we've received to date from a lot of our private label partners is the value and the simplicity and the access to the market. And probably equally as important that by being part of our platform, it's almost guaranteeing their real estate commission because they're going to get the deal done. And that's the number one criteria. There's such a huge dollar amount at stake on that real estate transaction that certainly the amount of money we're paying them, they would never want to jeopardize that. But if it really adds value to that, so yeah, they're not going to look to us as being a competitor directly.
Sure. Okay, that makes sense. Thanks, Mitch. Let's have a couple audience questions. Does anyone have the magic box? Anyone have a question for Mitch?
God, I must have done a great job.
Someone's coming up with a question. Yeah, please, right here in the blue box.
Good afternoon. My name is Mike, and I'm with Business Oregon. My background is in commercial and residential construction lending. But if I, as an individual, want to purchase an income-producing building and I'm looking for financing, can I, as an individual, access CommLoan?
Absolutely. Just go to CommLoan.com, hit get a quote. You fill in a very, very simple, take you probably less than 5 minutes form, which is just giving your contact information and very high level what you're looking for. And within hours, obviously business hours, you'll get a call from a loan consultant who will say, great, tell me what you're looking for. They'll understand what your needs are, counsel with you, really understand what your hot buttons are. Because once again, this is the importance of having a loan consultant in because, are you willing to maybe you don't want to go recourse. So they're going to say, well, if you go recourse, I can possibly get you an extra 15% on, loan to value on your loan. Would that help you? And you're going to say, no matter, so you really are driving it. And once again, that comes back to the consumer experience that we want to provide the best that you can get out there in the marketplace.
So if I am a commercial mortgage broker, can I access CommLoan for my client then?
If you're a commercial mortgage broker, we would bring you on board as a CommLoan office. We're not going to provide the technology. We would bring you on under our brand, which is what we're starting to do, is bring on small commercial mortgage brokers. And the reason why they would want to come on, yeah, they're going to give up a little bit of commission because that's what they're going to pay to us. But they're going to probably spend 20% of the time invested into that transaction using our technology and with our process flows than they would the traditional way. So they can really be focused getting out there and building their business and marketing and selling opposed to a lot of the busy work which we're now doing with the technology.
Great, thank you.
Great. Okay. We have time for maybe one more quick question. In the back
Ready?
there. Yeah, please speak into the box.
I'm new. I didn't know this was a mic.
It's super fancy. So my question for you is, would you ever be interested in diversifying or sourcing your investment funds from a P2B like business lending platform, or possibly starting your own?
So what I'm saying is getting just away from just direct, providing business financing in addition to the real estate side. I mean, that's obviously an option. I mean, once you got the platform, you got the customer base, the natural, the natural move would be into ancillary products and tying in and providing the equity component to the real estate transaction as well as being able to provide ancillary services like insurance and property management, et cetera, where we wouldn't do it, but obviously match them and take a small fee. So I think the key is, so that probably would be our first, as far as spreading out into ancillary services onto the platform. To say that we wouldn't, who knows down the line. But, I think at this point in time, we're dealing with such a massive market. It's such a huge opportunity in itself that, our goal is to stay very focused, do what we do it well, and that comes back to what I just keep preaching is that absolute borrower experience. Every borrower that we fund to date, I will make a phone call to find out what the experience was and how could we do it better. And I think that's really key to our success.
Okay, we're going to have to end with that. Thank you,
Good.
Mitch, so much.
Good. Thank you, guys.